right, gang. Good evening, everybody. We're just setting up the live stream here on YouTube right now. Just give me a half a minute until we get this thing going together. All right. I think we're doing. Yep, we're all good. All good. A bit of delay in it. All right. All right. Okay, and now we have to hit the record button. Okay, here we go. Recorded this computer. All right, good evening, everybody, and welcome to another edition of DayTradeSPY.com's Intro to Trading Weekend Review. And it is December the 29th. December the 29th. Sad news. Jimmy Carter, 39th President of the United States, passed away here today, 100 years old. He was the 39th President, the Nobel Peace Prize recipient, died at 100 years of age. So, yeah, our thoughts and prayers go out to the Georgia peanut farmer, served one turbulent term in the White House before building a reputation as a global humanitarian and a champion of democracy. Jimmy Carter, dead at 100 years of age. All right, let's move on. Let's get started here, folks. I see a lot of people still joining us here this evening. Welcome, everybody. And I'm going to just let everybody get caught up here because I know I'm just kind of watching all the people logging on here. And I want to close off some of my programs that might be taking some bandwidth. Okay, hopefully make things a little bit easier. All right, let's get started. And hope you can see me all okay there. I am live streaming, and it is Sunday, yes, December the 29th, day before the day before, right? Is that right? The day before? Let's see, what is it, the 29th? So tomorrow is the 30th. Yes, we are doing our live trading session tomorrow and Tuesday. It's a full day on Tuesday. Markets closed Wednesday for New Year's. Okay, hope you're enjoying the holiday season. Lots of activities going on. A lot of people coming and going to my house. Nice to see family come for the holidays. Nice to see them go too, isn't it? Okay. Folks, we have a questions box. You'll find a little questions box icon on your Zoom dashboard. Click on that. I am the only one that sees that, so go ahead and say whatever you want. And we'll try and get to some of your questions here. But one thing I don't want to do is hold you up all night. I hope to be out of here by say 9 o'clock, and so you can actually get on with the rest of your night. Okay, and I don't want to monopolize your whole evening here tonight. So anyway, okay, people are chiming in already. Build a lot of housing for the needy. Yes, Jimmy Carter did so. Okay, thank you for that, Scott. We are going to address that issue. Actually, it could come out, yes, the signal. We're going to talk about the signal a little bit here. It does come out around the same time as the trading room, so it could come out then. It could come out a little bit later too. We'll address that issue as we get there. Um, okay, let me see what other comments here just before we get started. Again, I'm just waiting for everybody to join us here. A lot of people still not coming online here. Okay. Thank you very much for joining the inner circle there, Mark, and good to have you all here. Okay, lots of people online. Look at some of these new names. Some names have been around a long time here, and good to have you all back here. And dear Annie, yes, met her on a cruise, dear Ronnie, years ago. When was that, dear Ronnie? Oh my gosh, got to be 10 years, isn't it? And my goodness, I'm looking at some of these names here. They go back way, way back. John J. Yeah, good to have you here. We'll be talking soon here. Mike, Paul, Phil L. Phil L. He goes back a long way. So years. I don't even know how many years. Let me just go back here. All right, let's get started here. People are still joining us. We'll get caught up. My name is Hugh, folks. All right, I'm going to be your head trader and trainer. We gave Aaron the night off here tonight. He's been working really hard, so we're going solo here tonight. Not a problem. Anyway, there is a questions box. You'll find a little questions box icon on your Zoom dashboard. Click on that. I'm the only one that sees that, so go ahead and say whatever you want. All right, and moving along here. I'm going to just leave this disclaimer up for you to read at your own speed here. So give you half a minute here to read this and do yes. Giovanni says yes. It must be over 10 years. Excuse me. For sure, it's over 10 years. Okay. Da-da-da-da. Okay, my gosh. All right. You alone are responsible for all your own trading, and past performance does not guarantee future results. I think you know that. I just got a comment here from Scott. Scott P. Apparently, Scott worked with Jimmy Carter building a house back in Georgia. He says he thought he was just going to show up for a photo op, but he actually worked. He was probably 80 at the time. And I remember that. He said, if I recall, he said, didn't he say something like that? I will never lie to you. If I ever lie to you, don't vote for me because I don't deserve to be your president. Something like that. So that was a pretty good thing. And anyway, your hosts here tonight, well, me anyway. My name is Hugh. All right. In the trenches trading. All right. That's where I learn most of what I teach you. And my background is with corporate America a long time ago. And I started trading kind of on the side, mainly because my own financial advisor was blowing up my account. And all the money I'd invested in with them didn't amount to a hill of beans. I shouldn't say that. Basically, I gave him money for years and years, and now here's the irony. I was an internal auditor. Okay, you'd think that I would have been on top of my account, but no. What's the saying? The dentist's kid's got the worst teeth or something. That's kind of the way it was with me. So I would get these statements from my financial advisor, but I never bothered to open them up. Oh, Mike, he's my friend. He's going to take care of me, right? My retirement's going to be really nice and rosy and really easy street, right? And then one day when I thought I better open up this statement and see just how much money I'm going to have, right? Surprise myself. It wasn't a surprise. It was actually a shock. How little I had. I called him up, Mike, what's going on here? I've been giving you money all these years. For years, I've been putting money into this thing, on a regular basis. Now, what? I've got a cheese sandwich out of the deal. Oh yeah, and he knew he was going to lose my account, and he kept trying to talk me into staying there. I said to him, basically, cut me a check for whatever's left. I'll buy it tomorrow. We'll pick it up the next day. So I did. That's what I did, and I figured I have to learn how to do this myself. So I thought about a couple of things there. I thought, well, first of all, I work with numbers. I'm pretty comfortable with numbers. I know a little bit about risk, and with the power of the internet, hey, it can't be all that hard. I think the information we have at our fingertips, we have that just as much as anybody else. So I thought I'd give it a go. There's a lot of people training. I think there's some courses out there. I'm going back many years. By the way, training back in those days was a lot of money. It was nothing to drop $10,000, $20,000 for training, and that's what I had done. But I learned a few things in those courses because it was really kind of funny. I'm not going to spend a lot of time on this, but I would go to these courses. Not always, some of these presenters were really good. They were actually excellent. They were very good presenters, and I'd always put my hand up and say, "So, Mr. Presenter, one question. You trade this yourself, right?" And they always said this was unbelievable. They always said, "Oh no, I don't trade it. I'm just the presenter. That's too risky for me." Well, thank you for your honesty. Close out my books. I'm out of there, right? If you're not going to trade it, you're going to tell me to trade it, but you're not going to trade it. Okay, something's wrong with that picture. One gentleman asked me to leave, which I said, no problem. Thank you. Thanks for your permission to leave. It was unbelievable. But I took a lot of different courses and stuff. And I learned a lot. I'm not going to kid you. I learned a lot of things, a lot of technical things and stuff. But mostly what I learned was number one, nobody cares or should care more about my money than me. And that applies to each and every one of you folks. Okay. Nobody cares about your money as much as you should. So don't just jump into something just because somebody said something. Okay, understand what's going on, understand the background. That's what we do. We teach you this stuff. Okay. And what's the other thing I learned? I learned, again, with the power of the internet, we all have information at our fingertips just as much as anybody else. So these a lot of these advisors, I mean, they get their income from from the flavor of the day, whatever products, that's what they call them, they are selling. And I found that I was just a pigeon, right? They're just using my money to advance their own agenda, and that's fine as long as you throw me a few crumbs along the way. But it wasn't really working out very well. So I set out to learn how to do this myself. Took many courses, but most of what I really learned was from the School of Hard Knocks. School of Hard Knocks. I graduated from there with honors. Okay, the School of Hard Knocks. Yes, it was. And I made a lot of money and I also lost a lot of money. But here's the difference. With all my losses, I tried to go back and see, okay, what did I do wrong? What did I do right? What did I do wrong? how did I find today this trade is a piece of garbage, whereas yesterday it was great? What changed? What happened? And I always tried to learn things. I remember asking people questions and stuff, and I remember somebody said to me, "Well, do you look at the Greeks?" I said, "Oh no, I don't pay attention to the Greeks. I know what they are." I said, "Well, maybe you should." Okay, that was an enlightening moment. Maybe I should. Well, it's so complicated. They said, yeah, maybe it is, but until you learn it, you're going to lose money and you're going to be like the other 95 or 98% of whatever that number is way up there where people lose money. But this, whoever it was, I don't even remember who it was, but he said to me, if you understand options, if you understand what you're doing, you're going to be ahead of the crowd. And those people, so those people are who are going to be ahead of the crowd, they are the ones that are going to win in this game. And if you're going to give money to somebody, the way I look at it now, of course, if people are going to pay money into this game of options trading, they might as well give it to me, right, instead of somebody else. That's kind of the way I see it. Or at least let me take my fair share, right? If you're going to lose your money, you might as well lose it to me. That's kind of the way I look at it. So anyway, I had a lot of fun with it, and I did learn a few things, and I learned a lot of things. And then I learned that there are a lot of indicators out there, many, many, many indicators. I think looking at the Schwab Think or Swim, and I haven't looked at it in a while, but last I think I saw like 260 indicators that they have up on their board, plus many, many drawings and different other things. That wow, you put all these indicators on there, and you'll never trade because now you're waiting for everything to set up. And many of these indicators I found to be redundant, or they're the same indicators as something else, but just under a different name, or I remember I went into this one gentleman's house. He showed me his big setup. This is very impressive. I remember he smoked. He smoked a lot. Um, he had several computers. I don't know how many screens. I want to say six or eight, maybe nine screens. I can't remember now. They're all over the place. And he had a TV up in the corner there with CNBC or something playing, and these all these and on every screen he had big screens, and all these screens he had all these all these panels on each screen. So he had maybe on each monitor, I should say, on each monitor he might have had three or four other things, graphs and all kinds of things, charts, everything. And I said, "Oh man, Mike," his name was Mike too. And I said, "Mike, you must be making a lot of money down here." And I'll never forget it. He puts out his cigarette. He looks up at me, and the place is full of smoke. He said, "Actually, Hugh, I can't make any money here to save my life." I said, "Well, I don't know what you're doing, but my guess is that you got so many indicators. If you're waiting for all these indicators to line up, uh, you know, by the time you get into the trade, that trend is over, right? It's no longer your friend. It's the end." And maybe I might want to just pair out some of those things and get rid of them. I don't. I can't even see where your prices are. Yeah. Anyway, I don't know whatever happened to him, but he's one of these guys that we would follow around. He and I we weren't together, but I would see this guy at all the various shows, all the various seminars that we used to go to. It was unbelievable. You would go to these, and you guys are probably, you've probably seen me at some of these things, and I've probably seen you and some of you, and we go to a seminar in, I don't know, Orlando, and then somebody in the back of the room would say, "Well, what about covered calls?" And they say, "Oh yeah, we're doing that. We're doing that seminar in New York next month. It's only $5,500, but if you book it now, it's only $3,500." So there we parade to the back with our credit cards in hand. Oh, I'll take that one too, right? Fly over to New York the next month, go through it all over again. Anyway, I realized you don't have to have a lot of indicators, right? You don't have to have all those indicators. Just use actually as few as possible that are effective. And I noticed too that all indicators, the way I trade, all right, I like to keep things simple, but to me, all indicators give you history. I haven't really found anything really that's that predictive. So we invented one. It's called the Yellow Brick Road. Anyway, more on that later. Anyway, that's my story, and I started making some pretty serious money on the stock market by simply trading options on SPY, the stock that follows the S&P 500. So in other words, you don't have to be a master of everything. Just learn one thing and one thing only and do it well, right? It's like you want to buy a pair of shoes, the best shoes, the shoemaker makes the shoes, right? The shoemaker who's been doing it all his life or her life makes really good shoes. Why? Because they don't make anything else. They only make shoes. They don't make belts, they don't make purses, they don't make whatever. They make shoes. So after many, many years of making shoes, they became quite good at it. And that's kind of the way I looked at this too. I thought, you know what? I started with stocks and I looked at penny stocks and this and that and you name it. I probably looked at it and maybe traded it. But when I zeroed in on just this one strategy on one stock, 1 hour a day, and making 5%, that's not so bad. That's not so bad at all. And I started making some serious money and bringing home the toys. I probably shouldn't tell you this. I'll tell you this little story. And things weren't always that good for me. All right. When I realized that my own financial advisor blew up my account, he also blew up my kids' education account as well. And I was pretty obviously I was pissed. All right. I'm not kidding. I'm not gonna kid you. I was really pissed. And but I really I accepted the fact that okay, the way things are going, I might end up pouring coffee in my 80s if a coffee shop will have me. But I will not have I will not jeopardize my kids' education fund. My kids are not going to go to some second-rate school and or get a job without an education. I will do whatever and anything and everything it takes to make sure they get a good education. I have this belief that we are obliged to bring forward an ever advancing society and that our kids should do better than we do. Okay. So that's why I set out to learn how to do this myself. And I remember my son, we didn't have enough money for him to get a car to go to, so I have a son and a daughter. Daughter was still in high school, and my son was just about to start university and at Buffalo, University of Buffalo, and I needed a car. I said, "I'll get your car, Alex. I'll get your car." And and it was funny. I actually I made a lot of money through some trading, and I surprised him. And I said, I'll find your car." Now, mind you, it was a couple years old, but I'll never forget when I opened the garage. So he came home from wherever. I said, "Okay, I got your car." And okay, but I want you to stand outside. And he I opened the garage door. There's this beautiful black BMW 325 or something right there. He was jumping up and down and crying, hugging me like, "Oh my gosh, really?" Yeah, really. Now that was his car. Now I told you about my financial advisor blowing up my account. That actually, so then my daughter also needed a car. I think a couple of years later, I said, "Okay, Alice, I'm going to trade your car in now because I have to get, your sister a car as well. We're gonna split things up a little bit. I gotta, we gotta figure this out." And anyway, I he was away at school and then he came back or something and my daughter just came home from somewhere and I said, "Okay, now." And both these cars are actually both in the driveway now. All right. So when they came home, I brought them in the back door. Okay, because you could where the cars were the two cars. You couldn't see them they came in from the back, so they didn't see what was in the front. It's okay now. I want you guys to close your eyes. I took them to the front door, and I opened the garage door from the inside so you could see out. And there in the driveway were two, they called them baby Benz. They were Mercedes Benz, a couple of years old each, but there were two of them. One was a really nice silver one, the other one was black. And they're both the same year. I think they're the three, oh, they call they're not the three, I think 230s or something, 250s or something. I can't remember now. I'm going back years. Each was 2 years old. And my son's was black and my daughter's was the silver and they were crying. They were tears. Again, they were a couple years old, all right. But I was able to make the money through trading. So anyway, enough of that, folks. I just want to tell you the power of options. That is the power of stock options. You can make a lot of money in a short period of time, starting with not a lot of money. All right. Anyway, my cohort in the trading room is Aaron. He's not with us here tonight. He mastered the deep dive technical. He mastered deep dive technical analysis in his teens. Opened his first account in his I think it was 17 or 18 or something. And recently, before Eagle grabbed a hold of him, he was actually the analyst for a $150 million commodity fund, and he's on with me in the mornings in our trading room. Tonight, I'm going to jump ahead here because we're going to be discussing last week's review, the upcoming week, your challenges, you can answer some of your questions, and the next steps to trading stock options. Okay. All right. So, first of all, an announcement. Our weekly newsletter is called Spy on the Market. It's a newsletter that I write. It's actually quite entertaining. People like it. It goes very well. It's a brief 3-minute read, 2.5 if you're fast. It's not a long, intense. I don't get a lot of numbers, nothing like that. Hmm. Pardon me while I take a swig of this energy drink here. Um, it's free. Comes out every Thursday. And I think you're going to really enjoy it. So simply subscribe by going to our website, DayTradeSPY.com. As you go there, the little pop-up comes up. Just leave us your email address, and that will subscribe you to Spy on the Market. Now, if you're not a subscriber, you can still get the newsletter. All you have to do is go to our website, DayTradeSPY.com. Go to the top left up in the corner there, you'll see Spy on the Market. Click on that, and you can see all the past newsletters that we have, and there's a lot of them. Okay, and every week there's a different topic. This week the topic is going to be traders' New Year's resolutions. All right, I think you're going to kind of enjoy it. So, Spy on the Market. All right. All right, let's move on here. This is what we're going to see here. This is what happened last week. Let's expand this chart a little bit and just talk about what kind of went on. Last Monday, we had durable goods orders initially dropped spy by the consumer confidence report, and new home sales pushed prices higher. We tested 595, went right into that into post-market hours, and a little bit of a rise in pre-market on Tuesday, heading into the holiday. Investors decided that we are going to take this up to the 602 mark. All right, and the markets closed at 1 o'clock. All right, because this was Christmas Eve, market closed, and of course it was closed on Christmas Day, Wednesday. Coming into Thursday, we had a technical drop, technical indicators coming into what looked like here double top, possibly some kind of a loose head and shoulders pattern here, but it looked like it was we had dropped here several points into pre-market. I find this happens a lot where just before the market opens, prices come down. Okay, was saying it's always the darkest before dawn. And that's kind of the way it is with trading as well. Whether traders get a little bit fearful or whether there's a little profit taking in the dark rooms or whatever. But the prices come down. Found a little support here around 599, and we bounced back up on unemployment claims, and we tested a double top over there, possibly a head and shoulders, a triple top. I guess you could probably call this a triple top into the afternoon hours here on Thursday, and then it drifted back down again. Drifted back down on Friday, whether it was profit taking to wrap up the week, whatever the reason, the market tanked about 8 points before closing out at 595. Okay, um, just the way it was. I think there's a lot of profit taking in there. Feds are expected to slow the pace of rate cuts for next year, possibly to 3.5 to 4% range. This is what the chart looks like that they're looking at, and going into 2026, 2027, they're thinking the interest rates may still come down further. The issue this week, of course, actually was last week, was that Fed Chair Powell was talking about, well, instead of 4 rate cuts that they initially thought, we're only going to do 2. And that really spooked the market a couple Wednesdays ago. I think it was 2 Wednesdays ago. And we didn't fully recover yet, I don't believe, but we started heading back up. We are starting to recover a lot for that. This chart shows, of course, the market implied and the Fed projected path of the Fed funds rate over the coming years. So we're going to see if this holds. All right. Here's what happened this last week. The S&P ran up not much, 0.7%. We broke 25% for the year to date. And this coming week, we're going to see if we can keep over the 25% gain. I suspect we may, but there's going to be a situation which I'm going to tell you a little bit about, and that might just throw a wrench in the works. We're going to wait and see what happens here. NASDAQ is up over 31%. The Dow is up 14.1%. This is year to date as of Friday. All right. This can change, but well, it's been a pretty good year for the S&P, and I believe this happened last year as well. Anyway, what happened here? That's kind of what happened. Coming up in the week ahead, we've got Chicago PMI report tomorrow, along with pending home sales. On Tuesday, it's a low, no news day, and of course, the market is closed on Wednesday, being New Year's. We're going to be back at it on Thursday with unemployment claims, and then S&P Global final manufacturing PMI report, and then the Institute for Supply Management manufacturing PMI report on Friday. Okay. Now, there is something that is of concern to me. I'll tell you about that in a little bit. Okay, volatility may be high tomorrow, but here's why. So I think it was yesterday when Treasury Secretary Janet Yellen um, disclosed extraordinary measures are needed to prevent the nation from hitting the debt ceiling as early as January the 14th. She dropped this bomb. And for that reason, I don't know. I cannot I cannot give you a volatility read for the rest of the week. It depends. It depends on the severity of her comments. This is an excerpt from Market Watch. U.S. Treasury Secretary Janet Yellen said her agency will need to start taking extraordinary measures or special accounting maneuvers intended to prevent the nation from hitting the debt ceiling as early as January the 14th. She sent this in a letter to congressional leaders. She says here, Treasury expects to hit the statutory debt ceiling between January the 14th and the 23rd. Address that to the House and Senate leadership, at which point extraordinary measures would be used to prevent the government from breaching the nation's debt ceiling, which has been suspended until January the 1st, 2025. All right. The department has in the past deployed what is known as extraordinary measures or accounting maneuvers to keep the government operating. Once those measures run out, the government risks defaulting on its debt unless lawmakers and the president agree to lift the limit on the U.S. government's ability to borrow. I respectfully urge Congress to act to protect the full faith and credit of the United States, she said. There's more to the letter than that, but this is just what I put up there. And so that has me a little concerned. All right. Now, on Saturday, when that went out, the futures tanked big time. S&P futures were down 69 points, but in checking it not too long ago, we pushed back up to about down only maybe about a dollar and a half, point and a half. So it looks like the market seems to be recovering from this news. Now, I don't know where it's going to go. We still have the Santa rally, which usually takes us to January the 2nd, 2nd or 3rd. So we still have some upward pressure in that regard, and also pressure from recovering from the meltdown that we had 2 Wednesdays ago. So we're going to keep things an eye on things to see where the pressure is going to be on the market. But hey, you know what? We make money both going up and down, and that's the beauty of trading SPY options. You don't have to, and unlike say mutual funds or whatever, that only can sort of make money going to the upside. And then of course there's all the rebalancing of funds at the end of the year. You get a lot of this going on, which also has a lot of heavy volume and a lot of trading going on, and that too has an upward pressure on the market. So we're going to wait and see what happens. But again, unfortunately, I do not have um, a volatility read for the rest of the week. Could be high, but depending on the news, it could trickle down and not too much. So we'll see what happens. Anyway, moving along. All right, we've got many opportunities every day to make money, and oftentimes we make money both going up and down. And here's the irony too. I mean, sometimes Aaron and I, being in the trading room, will see things in a different way. I might see the market going up, he'll see it coming down. Sometimes I'm right, he's right. Sometimes he's right. Sometimes I'm not. Usually we're both right. Usually we're both right, just at different times. Okay. But anyway, we've got many opportunities every day to make some serious money on the stock market, and we show you how to spot them and how to trade them. Right. It's kind of like a treasure hunt. You sort of uncover these little nuggets and clues along the way. You say, I think it's going to go up, and here's why. And this is what we do in the trading room. We discuss these various clues as to why we think the market's going to go the way we think it's going to go. And then I like to get into the trade, and when the market goes up a little bit, I like to take my profits. All right, that's what we do. So here's what we do, folks. Get to give you an idea as to some of the services that we provide. Because yes, that's what we do. We don't teach you everything here in the Sunday night free thing. You have to pay for it, and you will appreciate that because you will understand that you will only really learn when you have skin in the game, right? If you don't have any skin in the game, you're not going to give our lessons the respect that they deserve. Don't forget, we spent many, many years, a lot of effort, a lot of losses, a lot of sweat, a lot of tears, uh, and I think some blood too. I think some bloodletting too. I don't know, but we spent a lot learning this stuff, so we don't just give it away, and you're going to appreciate that when you know you are of those that few percentile that knows what's going on, and you're able to extract money from those people who don't know. And don't feel so bad because they're in the game. Everybody knows the rules going in the game. You know the risks. Excuse me. So you might as well take you might as well take their money, right? So we got several services I'm going to tell you a little bit about here. One is the Day Trade Spy Signal. The Signal is an independent service, apart from the trading room, apart from everything else, that is sent to your cell phone in the mornings 3 to 5 times a week. And when you get this signal, it's also emailed to you, but watch your cell phone because I think you get it faster on your cell phone. You get it right away. As soon as you get it, whatever you're doing, stop what you're doing, pull it up on your computer or on your cell phone, the app, and enter the trade right then and there. It's a particular option that we tell you that we are interested in buying, right? So you would buy it right then and there, and instantly you put it up for sale right away for a 5% profit target. Then just close off your cell phone. That's it. Go on with the rest of your day. Usually it fills very quickly, sometimes a little bit later, but if it's not filled by the end of the day, sell it for the market price, okay? And then wait for the next one, the next day or the next day after that. Again, 3 to 5 times a week you get the signal. Very well priced, very sort of an easy way to make money. It's actually ideal if, say, you're working or you're busy or running around, you don't have time to watch the charts all day. And it's been a very effective. I don't have the numbers. I had the numbers, I think, last week or the week before. I'll just see through my notes to see. I don't think I have the numbers handy. No, I do not. I would say the success rate of that is up around I don't know 89, 90, 91%, something like that. In fact, all of our services are and products are up around that 90, 91, something like that percent success rate. Next up is the pick of the day, sort of similar to the signal, but you get this notice in the morning just after 9 o'clock Eastern time. It is sent to your inbox. It's a particular option to be purchased at the market open. All right, so we're going to give you, say, Friday, January the 3rd, $600 call option. So when the opening bell comes, you wait a few seconds, right, for the bid-ask spread to settle in nice and tight within 2, 3 cents of each other. Check the 1 minute chart. If you're getting a green candle, if you're seeing pressure to the upside, you buy it right then and there. All right, you just simply buy it. Nothing more to decide. The decision is made for you. If on that 1 minute candle, let's say the option is that call option, but on the 1 minute candle you see it going down, the pressure is going down. Wait until the pressure comes back up, then buy. You're going to get it for a little bit cheaper, right? You're going to get it for a discount, and then immediately put it up for sale for a 6% profit target. Now we like to tell you that the 6% usually hits very quickly, which it does. Sometimes it'll hit a little bit later on. The odd time you might even want to hold it. Oh, if you have to, I can't even talk. If you have to hold it overnight, that's okay too. And sometimes I do that. Now, we do tell people that, okay, for those of you who are really insistent on not holding overnight and you want to have a stop loss, then put a 40% stop loss in on this thing. It's very rare that actually takes us out. Very, very rare. Usually with the pick of the day, in case it does not hit the first day, usually it does the second day. But it's most of the time, I would say, by far, the vast majority of time, it hits very quickly after you make the purchase. So it's kind of a nice, easy way to make 6%. All right, and if you do have to hold it overnight, it is designed to have some time in it so that you can actually hold it overnight. That, folks, is the pick of the day. One of our more popular, both of those, the day trade spy signal and the pick of the day, are very, very popular, as is the inner circle. So the inner circle actually started back in 2010, along with the trading room, which was actually the first. Now, this is actually kind of interesting, bit of a sentimental thing here with me. And when I first started trading and people started noticing that I'm bringing home the toys, I mentioned about the first the BMW and then the two Mercedes, right? Okay, Hugh, they said to me, my neighbors and friends said, okay, Hugh, what are you doing? You're obviously onto something. You won a lottery or something, you know? No, no, I'm just day trading SPY options. Well, show me, show me. So everybody around me coerced me into to teaching them stuff, and just to post it up on the website. I don't want just put it somewhere on the website. I don't care. Send us an email, something. I just want to see what you're doing, right? So I posted a very rudimentary website. It was actually pretty funny, and as to what I'm looking to do every day, and a follow-up report later in the day. And then we also started a weekly meetup where we get together and just discuss the market and what I'm doing and stuff like that. That was the inner circle. That started in May 2010. May 2010. Here's what we're getting at 2025, still going strong. And of course, the trading room is part of it as well too. So that's the inner circle. Very, very popular. And also, so you still get the morning updates just after 9 o'clock. You get a follow-up report as to what we actually did during the day, including the trading room activities. These are very brief reports. They're not long, strenuous reading and it goes on and on and on and on. You want all that, you can go to somewhere else. These are very short snapshots of the way we see the market unfold for the day in the morning. And the follow-up report, same thing. Just a very brief summary as to what we actually did. Now, if you want to get into it, join us on the Wednesday night webinars, 8 o'clock Eastern. Aaron actually runs that. Talk about what we actually did. All right. And if you can't make it on the meetup, doesn't matter. It's recorded and sent out to you later after the session is over. The biggest thing I think that we do, the most popular thing, is the trading room. Trading Room 2 has been going since 2010, hosted by Aaron and myself. This is where strategies come alive every morning, 9:20 to 10:30 Eastern Time. We get together at 9:20, excuse me, and to discuss the news, the events, all the things that are going to shape the trading for the day. All right. And see what's important. So what we do is we take all the news feeds that we watch, the Twitter feeds, oh sorry, X, all the X feeds that watch, and all the various things that come at us, and we put it into the big mixer, that we have. We churn it around, and then see what comes out. Then we say, okay, I think the market's going up. Well, I think it's going to go down first, then it's going to go up. Or sometimes what I've been doing lately, I think it's going to go down, go up, come back down, and over here it's going to come back up, and over here I'm going to buy when it hits this level. We get into all this analysis as to where we see the market going, and this is what we discuss. Come the opening bell, we get in, we look at getting into the trades, right? And look to make our money as early as possible, get in, get out, make some money, look for the next trade, look for the next trade. So we do generally several trades a session. And record's very, very good, very, very good. So very exciting, folks. You can learn, and this is not a watch you and Aaron trade session. This is a learn and earn session. So you're going to learn from the best. These are interactive. It's exciting. We have a lot of fun. We go back and forth, kibitz back and forth, and and you're going to learn things. You really are. I mean, you should. If you're not learning things, that means you're just falling asleep. But it's actually pretty good. It's also interactive so that you can ask questions, and we like to answer the questions. We have fun. We play games, right? And we teach what we trade, and we trade what we teach. So we're not just giving you a lot of theory, a lot of what ifs, none of this stuff. It's no fairy tale stuff. It's all real stuff that we use ourselves every day to make money on the market. We're just throwing this at you so you don't have to take that learning curve like we did. Watch us make real trades, real setups using real money. If you have any questions, again, you get them answered in real time. This is the longest running trading room that I know of. We've been doing it since 2010. So I like to think that we're probably pretty good at both trading and training, which is what we pride ourselves on with what we're doing here. Okay, so I think that's pretty exciting. All right, the cost of the trading room is $699 for 3 months. Now, if you go to our website, DayTradeSPY, I think it's going to cost you more than that. I'm not really sure where it is right now, to be honest with you. But what you should do for any of our services, whether it's the DayTradeSPY Signal, Pick of the Day, Inner Circle, or the Trading Room, email customer service at daytradespy.com. Now, just so you know, they get very busy. All right, because they're swamped with people emailing them and all kinds of things going on. They're very, very busy. If they do not respond to you, just hang tight. They will. Or you might want to send them another email. Give them, I've been told to give them 2, 3 days even sometimes to get back to you. They will get back to you. And ask them, say, what's your special price on, for example, the trading room, or what's your special price for the day trade by signal or whatever. And then they're going to get back to you with the special price, which I believe is probably going to be better than what you see on the website. Okay, very important. All right, so my question to you is, can you afford not to subscribe? Now, I've had this question posed to me before. Well, I'm not an expert trader. Should I still join the trading room? I said, absolutely. I mean, I will ask the question, do you know what calls and puts are? Now, if you don't know what calls and puts are, then I would say, we should take that conversation over to the side. Okay, then you're probably not ready for it. But basically, if you know what calls and puts are, you're good to go. Now, here's the other thing. I've had some people, they jump into the trading room and they stay there for a day or two or maybe even a week. Oh, I don't get it, they say, or I don't understand, or they then they run away. They run away. You have to give it. It's like anything else. What you put in is what you get out. And those people that have been with us for a while in the trading room, they are doing very, very, very well. A lot of these people are that we have in our trading room have been there for a very long time, and I got to tell you, they're knocking them out of the park. And a lot of those people are doing much better than Aaron and me. I'm not going to kid you. I'm very proud of them. And if it wasn't for these crazy privacy laws, obviously, but I'd be parading these people all over the internet saying, my gosh, you guys are doing great. You're awesome. So what we do is they chime in with their wins and we give them a bell, we say congratulations to Terry W. Just picked up 10% in the last 10 minutes, this kind of stuff. So we have a lot of fun with it. So I suggest that you join the trading room if you're not already a member. All right. And I think it's really pretty cool. All right, let's move on here. Here comes the 2-minute tutorial. What are we going to talk about today? Well, I don't really like New Year's resolutions because I just simply cannot keep them for very long. I think my record's about a week for something, but I thought I'd do one here on trading. All right, so here's my top 10 New Year's resolutions for trading, which actually happens to be also the topic of our newsletter this week. Number one, I'm going to be this. This is for my own, all right, but I'm also going to recommend it for you as well. If you have not made any resolutions and you're thinking about what resolutions can I do, well, focus in on your trading because if you become a really great trader, you can do a lot of other things too, right? You can fulfill your dreams. Talk to people. One gentleman wanted a vacation property and he traded well on the way to getting his vacation property. I'm not sure whatever he ended up buying or something. And I know years ago another person was looking for a boat. I'm not sure what they ended up buying or something. But everybody's different aspirations, different goals, and whatever it is, you can actually make a lot of money by trading. So if you can actually ramp up your trading, you can fulfill all those other goals that you probably are looking for in your life. So my number one is going to be here. Be aware of my fear, greed, ego, FOMO, right? Fear of missing out, and YOLO, which is you only live once. These are the emotions, and I can tell you that for me, here's my emotions that really is this can this will work, right? For me, it's greed. I don't know if I really like this. I don't know if I'm going to trash this. Clear my drawings. Okay, there we go. Maybe there's something else you can do. Spotlight, spotlight. Okay, let's try this. I'm just having fun with this. For me, it's greed. Well, it doesn't work well though. It might be something else here. Erase, no. Color, I don't know. I think it's going to work. Clear. Okay, we'll clear all the drawings. Folks, for me, I get greedy. Not so much anymore. I used to. And my friends would say that I'm the most generous guy out there. I would give my shirt for my friends. But when it came to the stock market, I would always try and squeeze that extra penny, right? I'd always try and just squeeze that extra penny. And of course, it would always come back and bite me. But I think I've kind of got over that. I'm not so much into the fear or ego. FOMO was a big one for me. Fear of missing out, right? You ever feel like you're on the outside looking in? Everybody else is having fun but you, right? Everybody else is making money but you. What's going on here? Oh, I should be in a trade. The market's open. The market's open. It's going up. It's going down. I should be in there, making money. That's a big one. That's a really big one. YOLO, you only live once. I don't have that YOLO, but I do know people who do. One friend of mine, he had that really bad, and he blew out an awful, awful lot of money. I just had dinner with him the other night, a couple nights ago, and I don't want to dare even say how much he blew out, but he said over the years he lost well over $1 million. He also made a lot of money doing it, but doesn't trade anymore. And he said that some of these, and I could have wrung his neck. I said, "Oh, you of all people, no, you've been with me for a lot of these years and stuff, and talked, and we know we kind of did a lot of stuff together here." But I said to him, why are you going around, running around, looking at these other gurus out there and other services that, maybe they work, maybe they don't, but once you stay with the tried and true. You already know how to trade SPY. Why don't you just stay with SPY? I don't know. I'm such an idiot. Anyway, he would throw a lot of money into, well, I'll tell you what he threw a lot of money into. Um, Cannabis. I think it's called Canopy Growth. I think he paid 50 some dollars a share, or $57 or something like that, a share. And then they had a reverse split. Long and short of it, I think his shares are worth something like 17 cents each now. So he really took a beating on that. So anyway, these are this number one. Be aware of my fear, greed, and ego. Number two, check for proper setups before entering a position. All right. So I tend to sometimes maybe, yeah, I think I'm about 80 or 90% the setup is there. I'll jump into it. Well, I'm thinking here I'm gonna probably wait a little just to make sure. Just try to be 90-95% sure instead of 80-85-90%. Just make sure, if that one last indicator you're waiting for. I understand that sometimes I am going to forsake a couple cents on the option perhaps, but I'd rather do that and be in a more sure kind of a trade than to take the risk and just wait. If I'm waiting for the stock to break resistance, that's what I'm going to do. And that comes into number three. Can exercise patience and discipline when needed. Sometimes you just have to be patient. You have to wait for that certain event to happen before you enter the trade, okay? Like break resistance or something, right? And a lot of discipline in there too, right? You got to be disciplined. Number four, you got to make sure I check upcoming news items for potential conflicts. Sometimes this last year I was a little negligent on that. Oh, wait a second here. I forgot about that. Coming up in 10 minutes is this news item that could thwart the market, go the other way. Doesn't mean I'm not going to trade. I'm going to wait for the news item, but I'm going to check to see what's the likelihood of it coming in. As an example, let's say the S&P Global PMI report on manufacturing is better than I expected, or sorry, higher than I expected. And then 15 minutes later, the next, what is it? The other consumer bureau or something, manufacturing PMI report is also released. Well, I find that second PMI report will usually follow the first. So if the first PMI report is greater than expected, the second one will probably be as well. So I can anticipate what the market is going to do with that news if I anticipate the news. And this is what I'm saying is that I'm going to be a little more aware of these news items, and especially coming up now with the new administration and all this stuff that's going on, right? There's going to be some real surprises, I'm thinking here, now that we have Presidents Trump and Musk. Um, I think, not sure you heard this, but I heard that Musk wants to buy Christmas. Everything Christmas. He's going to own Christmas. And he's going to change it from Christmas to Xmas. Xmas. Um, that's actually a joke. Okay, just so you know. But anyway, probably not a very good joke. I just thought of that. Anyway, check news for upcoming potential conflicts, right? It conflicts with your technical indicators. Number five, stay healthy physically, emotionally, spiritually. If you're at all not feeling well, if you're on medication, if you're bothered about something, if you had a fight with your dog, or, probably stay out of the trade. Always better to be stay out of the trade wishing you were in than to be in a trade wishing you weren't. All right. Number six, stay true to your proven strategies. Um, I have certain key strategies that I've been using for years. They work for me. All right. If you want to see what they are, come in the trading room and I'll show you what they are. Right. I'm not going to experiment with other strategies. This year, I want to stay true to my proven strategies because they work for me. As soon as I start deviating, I tend to get into trouble very easily, right? Those strategies, they have guardrails. And when you veer off, the beaten path, you're venturing into territory unknown. And and sometimes it just doesn't really work out. I'm going to, concentrate on celebrating the winners, but review and learn from errors, which I still do. But I'm going to make sure I sort of more focus in on that. And I'm also going to curb my over trading. Sometimes I overtrade. So I'm going to have my daily targets, which actually falls into my trading plan. I want to make sure that I have a plan. And then when I hit my daily target, I'm done. I won, I'm done. And, and it was fun, right? One, done. It was fun. When you hit your targets, stop trading. Let somebody else make some money. You don't have to take all the money. Because how many times does this ever happen to you? Oh man, I just hit a winner and another winner, another winner, another winner, and then I'm in a losing trade now. That last trade I did, now it's losing. And then you're sitting there waiting for it to turn back around. The end of the day comes, 4 o'clock comes. Now you have to decide yourself, well, do I give it all back, cut my losses? Or do I hold overnight and take my chances, or what do I do, right? And then you say to yourself, man, if I had just stopped trading after that third trade, I'd have been up $850. Is that so bad? Done by 10:30? No, let's keep trading. Let's see if we can lose all this money now, right? Has that ever happened to you? Happened to me more than I care to count. I don't want to do that anymore, right? When I hit my target, I'm done and I'm out of there. Plan your trade and trade your plan. Folks, you've heard this many, many times, I'm sure. If you haven't heard this saying, plan the trade and trade the plan, you've been living in under a rock in the trading world. And this, I think, is really important. And again, focusing on this. And number 10, make sure it stays fun. When trading is no longer fun, what's the point, right? What's the point? So that's kind of my resolutions. If you want to steal them, go ahead, add to them, whatever you want to do. Have fun with them. All right, let's take a look here. Some questions up on the board. Okay, I'm kind of running into time here. Okay. Okay, let's see. Hey, I got to read some of these essays people wrote me. Uh, okay, here's a question about stop losses and stuff. Now, there's two different schools of thought on stop losses. Personally, I don't like them and I tend not to use them. Now, admittedly, one of my little strategies, if I see a real trend forming, I've had a good morning so far, I don't mind putting a little money sort of at a high risk gamble trade where I will buy same day options kind of on my own with a trailing stop. I don't advocate this because it is a high risk and you have to be prepared for the loss. That's really the only time I use stops. What I do is I really want to make sure that my setup is a good setup. And if I have to weather these storms, I call them little storms coming through, then I will. And and if it means that I have to maybe hold overnight, possibly repair the trade, I will attempt to do that. I tend not to want to use stops because I find that stops will take you out all too often, which is what they're designed to do. But overall, I find that when I used to use stops a long time ago, my net was kind of on the negative side. But if I exercised patience, if I did my homework, and longer term, I'd be okay with it. Just be patient, wait, and usually it comes back around and gives you a profit. So, but sometimes we do have to, we can't leave the trading room without having some sort of a resolution to our trades. So I'll tell people, say, okay, I'm in this trade. I'm going to hold on, which I'm in from the other day, Friday. I'll hold on and I'll repair it possibly, or just be patient with it. But if you really are insistent on getting out of the trade, use the, say, 40% stop loss, or we'll tell you maybe 10%, or take the loss now because it doesn't look like it's coming down. Okay. So that's what I would do. Everybody's on their own when it comes to that. And again, two different schools of thought. I know some people that do use stops. Um, it's hit and miss with those stops. I know some people who use stops. One gentleman in particular, and he's always kicking himself. He says he's got this tight stop. He said, but man, he says to me, if I'd have just waited another 10 minutes, it would have come back and given me my 20% profit that I was aiming for. I don't know what it is, but every time it seems like when I trade, I have a way of reversing the market when I buy it. When I buy a call, instantly the market reverses, goes down. When I buy a put, it bottoms out and shoots back up. He said, I don't know what I'm doing here. All right. I do prefer, yes, Catherine, I prefer calls. I have a bias towards calls. I will tell you that. You did hear that correctly. Would it matter if we don't care if the market goes up or down? We want to write it either way. So you can write the market either way. So that's the beauty of options. You can make money going to the upside with calls or downside with puts. And I have made lots of money on puts as well. But when I go back and look at my log, long term, I found that most of my issues were with puts. I go back with puts, and I log my trades, and I'll take a look at them, and I say, look at this. And sometimes I guess I have a sense now as to where I think the market's going to go down to and reverse and go back up. So so I try to aim for the calls. If you leave the market alone and don't upset the market, it likes to gravitate to the upside. Okay. If it goes down, it's going to go down now, fast and furious. Tends to go down about 5 times as fast as it goes up. And yes, you can make some money on puts, but I know for a fact that sure as we're sitting here that the market's going to find some level of support, right? It's always going to find some level of support and reverse and go back up. And there's nothing worse than when you're going against the tide, going against the wind when the market is, when you're going against the market with puts. I really hate doing that. I hate watching that. It's just like, oh no, not again. Why? Why? I got fooled. I got head faked into it. On the other hand, if the market's really tanking and I see the whole more chart set up and stuff, okay, I'll run it with some puts and run it down. So, Phil, good point, Phil. Always buy time. That's another one where here's the comment that comes up a lot, and that is that, folks, it's 8:50. You guys okay if we go a few minutes overtime? Because I want to get some of these questions here. You guys okay with overtime? Just a few minutes, not too long. Um, People say to me, Hugh, you want to get in and out in a few minutes. Why do you worry about time? Why the theta loss? The answer to that is very simple. To me, how can I use an analogy here? Uh, okay, it's like I don't know, I'm trying to find a good analogy here. As far as I know, I don't have diabetes, but I know that if I'm not careful and I eat a lot of sugar, I may develop diabetes, or if I'm not careful with my health and I start getting really overweight, I may develop illnesses due to that. So even though I may, not have those issues right now, I know that if I'm not careful, I will. And the same goes true for that. I don't have an issue with trying to get out of the trade because I don't go into a trade expecting to lose. But I don't know, nobody really knows anything when it comes to this. I don't know what can actually happen during the time I'm holding this option. It could reverse on me. And with something that does not have enough theta in it, in other words, something that's going to expire today or tomorrow or the next day, all right, not a lot of theta value in there. So, or maybe a lot of theta value, whatever it is. When they suck the theta out of that option when it goes against you, um, they don't put it back as quickly. All right. So let's say the stock is at $600 and the option is $3. And then the stock goes down to say 595 and the option goes down to, I'm just throwing a number out there, a dollar and a half. And then the stock goes back up to $600 2 hours later. That option does not go back to $3. That option might go to $2.20. It doesn't go in the same way there. You get volatility thrown in there. You get time, especially same day options. You see that time going by like crazy. And if you're in a bad trade, it sucks away at your premium like a vacuum cleaner. At least if I buy time. So let's say I buy the following Friday's expiration and I have a very low data loss in relation to the value of the option that I bought, right? That's one less thing I have to worry about. I don't have to worry about a theta loss premium. And don't worry if the option costs more money. You're going to get it all back when you sell it. So instead of paying $3 for an option, you paid 5 or 5.50. When you sell it, you're going to get it all back. So what's the deal? Instead of maybe buying 50 contracts at $3, you might buy 20 contracts at 5 or something. So that's kind of what I do there. So next question here. Thanks for that, Scott. Totally agree about the kids' education. Both my daughters have masters. Good. One went to Davidson, the other to Yale. Nice. All paid for in full by a dear old dad. Absolutely no student loans or debt. Way to go, Scott. That's awesome, man. That's cool. Absolutely, right? Don't forget your kids might be the ones that are going to pick your nursing home, right? Is that what the saying goes? What are the indicators that you consider for the SPY recommendation? Ron, if I told you that, I'd have to kill you. Our recommendations actually take into account a lot of different things. Okay, I'm not gonna dance around. So I'm gonna just tell you. So there isn't any one indicator we use to determine our recommendations for our SPY indicators. Right? We incorporate a lot of different things. Different things go into that mix. So there isn't any set of indicators. We look at the news that happened. We look at the upcoming news. We look at the technicals. There's a lot of stuff that goes into it. So it's and between Aaron and myself, we have over 42 combined years combined of market experience. So uh, I don't know what you want to say on that one, but there isn't any one indicator or two or three indicators. We look at everything what goes on into it, and then we make our pick on that one. Yes, I'm still in the 590. I think it's the 598 calls. Robert P. Do you think we're going to recover the options this week? I do. I think so. We'll figure some way out of that. Lately, the morning market comes out late. Placid, is that how you pronounce your name? Placid? Placid? Uh, yes, we are going to be changing that very soon. We are going to. Okay, so the question is, the morning market analysis has been coming out a little bit later than normal. That is going to be going back much earlier. So rest assured that will change right away. Can you explain how to repair the trade? This is something that we teach in our trading room, how to repair trades gone bad. Quite extensive. Again, this is something that's in our trading room, so you have to join in that one. So, what is your favorite options trading platform? Actually, I use two. I use Tasty Trade for my big trades because they have excellent commission structure and an excellent commission structure, which is $1 an option to open a position and 0 to close, up to a maximum of $10. All right. So if you're trading 5 contracts, it's $5. By the way, plus exchange fees, which is pennies. If you're trading 100 contracts or 500 contracts, the commission that you pay is $10. Okay, $10. Can't beat that. Can't beat that. Can't even touch it. I also like to trade on Thinkorswim, Schwab Thinkorswim, because we actually show the Thinkorswim charts. Schwab is superior with the Thinkorswim charts, which interestingly enough was written by the same people that have Tasty Trade, Tom Sosnoff and his crew. And so we use the Thinkorswim charts, and I still trade Thinkorswim as well because I figure if I use their charts, I should probably give them some of the commission on that as well. So those are my two trading platforms that I use. Thanks for that, Alexi. So you made a very nice trade on puts last Friday, the same day expiration. Yes, I think he's referring to the trade that was in for what 53 minutes or something for 116%. to the upside. That was actually a pretty cool trade. All right, gang. I see that it is now 9:04 Eastern time. I think I'm going to wrap it up here. Thank you all for joining us, folks. It's really been a pleasure, and the recording is going out here pretty soon. So, actually, the recording of the webinar should be on the website daytradespy.com tomorrow. So if you want to see this again tomorrow, just tune it in. Have a wonderful New Year, folks. We'll see you next time.
Give it all to you, and trust the process to keep your eyes on the bright side.